Hi, and welcome to Axis Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market moving factors that set the tone for the day. Whether you are a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in.
Good morning on Thursday, and we'll start with the global markets. The US Federal Reserve cut the key lending rate by 25 basis points to a range of 3.5% to 3.75% and signaled a limited room for further easing. The Fed also announced that starting Friday, it will resume buying $40 billion in treasury bills, pushing short-term yields lower. The central bank acknowledged a weakening labor market and indicated a shift toward supporting growth over fighting inflation. The Fed also raised its 2026 GDP outlook and sees inflation staying above 2% until 2028. The US markets rallied after the rate cut decision, and overnight, the Dow gained 1.1%, the S&P 500 rose 0.7%, and Nasdaq added 0.3%. Asia Pacific markets also opened higher today, with Japan's Nikkei slightly up and the broader topics advancing 0.4%. Moving on to the Indian markets, Nifty ended the previous session at 25,758, down 82 points, while Bank Nifty settled at 58,960, down 262 points. Nifty printed a bearish candle with a strong upper shadow. It was unable to sustain about Tuesday's high of 25,924 amid caution ahead of the US Fed outcome. The index found support at 25,716, aligning with the bullish gap zone and the 61.8% Fibonacci retracement of the November rally. Volatility remains elevated as traders position themselves ahead of key global cues. Today, a break below 25,700 may accelerate profit booking towards 25,600 and 25,530. For bulls to regain control, Nifty must reclaim 25,864, which will pave the way towards the level of 26,000. At the sector level, the top gaining sector for the day was Nifty Media, which was up 0.5%, while the biggest loser was Nifty Consumer Durables, down 1.7%. Out of the 12 sectoral indices, 3 closed in the green and 9 ended in the red, indicating broad-based weakness across the market. Amongst the F&O stocks, Hindustan Zinc was the best performer with a gain of 4.2%, as silver hit fresh lifetime highs. On the flip side, Keynes Technology was the worst performer and declined 10.5% as brokerages cut target prices after the recent sell-off. The stock has now fallen in 5 out of 6 consecutive sessions. On derivatives, the cash market turned distinctly defensive yesterday as FIIs pulled out rupees 1,654 crore, pushing monthly outflows past rupees 12,000 crores. This pressure also weighed on the rupee, which ended slightly weaker against the dollar. In the futures segment, both Nifty and Bank Nifty saw a clear short build-up, with falling prices paired with sharp rise in open interest, signaling strong bearish conviction. Options data showed broad de-risking, with the Nifty PCR slipping to 0.73 and Bank Nifty PCR to 0.82 as traders unwound positions ahead of the crucial US Fed outcome. FIIs maintained a mildly constructive bias through selective option positions, but proprietary traders stood out as the most defensive group, aggressively adding put hedges. Despite the heavy caution, India VIX eased to 10.91, indicating expectations of controlled moves rather than volatile ones. Near-term levels remained defined, with Nifty resistance at 26,000 and support at 25,500. Overall, the market significantly strengthened its bearish positioning heading into the global policy event. On commodities, spot gold ended flat at $4,209 per ounce, down 0.02% after the Fed cut. Technically, gold remained in a tight consolidation range between $4,160 and $4,270. WTI crude oil closed at $58.14, up 0.12%. Prices stayed pressured by expectations of supply glut despite a 1.8 million barrel drop in US crude stocks, while gasoline and distillate inventories rose sharply. That's it for today. Please note that this podcast serves solely for informational purposes and should not be considered as financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you and see you tomorrow at the same time.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.